Today, I'm doing something insane. I'm giving away my entire trading strategy that has never lost money in any backtest, and I've got the proof to back it up. But first, I'll give $10,000 to anyone who can prove this trading strategy doesn't work. No cap. This is the craziest trading strategy you'll ever see. No fancy indicators, no complicated patterns, no paid indicators, nor order blocks that don't even work. Just pure money-making market mechanics that even my little cousin could understand. Look at this trade right here. This is the one that almost destroyed my entire account. Every trader has a moment. A trade that haunts them. A loss that cuts deeper than just money. Mine wasn't just about dollars. It was about dignity. About proving to myself and everyone who doubted me that I could master this trading game. The entire trading game is rigged against you. The big banks, the algorithms, the prop firms, they're all playing the same game, and I'm about to expose everything. Want to know the craziest part? While everyone's out here losing money with their fancy indicators, I discovered something that changes everything. See this chart? Look closely. This isn't just random lines and colors. This is a map of where all the money is flowing. This is what I call the Stealthy Inside day pattern. Bank traders use this to silently accumulate millions, and most retail traders scroll right past it. This is insane. This pattern appears on every time frame, every market, and it signals exactly where the smart money is flowing. And in the next few minutes, I'm going to show you how to spot it before anyone else. Every single person who told me trading is gambling is about to eat their words. Because in the next 10 minutes, I'm going to show you how I turn the tables on the market makers. Exact 5-step method that works every time. Real trades with real money, no fake stuff. And how? You can do this too, even if you're starting from zero. But here's the deal. You need to watch this entire video because I'm dropping 3 secret tips that could literally 10x your trading account. Most traders will never know these secrets. Remember that trade that almost broke me? Well, get ready, because I'm about to show you how I turned that same setup into my biggest weapon. They hunt your stops, we'll hunt theirs. They take your money, we'll take it back. They profit from your emotions, we'll profit from their greed. This isn't just another trading strategy. This is your moment to finally beat the market at its own game. Welcome to Bullish Wicks. One setup, one moment of clarity. That's all it takes to change everything. Subscribe right now and hit that bell icon, because what I'm about to show you will transform you from the hunted to the hunter. Stop everything. This next part is the most important thing you'll ever learn about trading. Because if you mess up this part even slightly, you'll completely destroy the entire trading strategy. Let me show you something insane. See all this? Most traders think this is just random price movement. They're completely wrong. The market only has 3 moves: uptrend, downtrend, and sideways. Here's the core principle. In a trending move, we have 2 critical phases: impulses and corrections. Impulse moves are the primary trend direction, while corrections are the pullbacks that test trader conviction. Why does this happen? The market is essentially a continuous auction. In an uptrend, for example, buyers will pause when they're not happy paying the current price. Buying temporarily slows, allowing the market to find a price point where traders are comfortable. Once that sweet spot is found, the next impulse begins. Most traders get this wrong from the start. They make a fatal mistake in reading market structure. They get lost in every tiny price movement instead of seeing the bigger picture. The key is to view market structure as waves, not microscopic ticks. Look at the big picture trend, not at every small push and pull price action. But here's where it gets crazy. Most traders lose everything because they trade every single price movement. But I discovered something that changes everything. You see this? Everyone thinks if the price makes a new swing low, it means sell everything. They see a lower low and think downtrend, but that's dead wrong. What if I told you that the only thing that matters is if prior to making the new low, the price broke above the previous swing high or not? While the price made a lower low, prior to that, the price also made a lower high, which is the very definition of a downtrend, a sequence of higher lows and lower lows. Let me repeat that. The only way to validate a swing low is to check if the price also broke the previous high. This means that in between you can have multiple price movements: up, down, sideways, But as long as you don't break that critical previous high, the prevailing trend is still alive. By mastering this concept, you'll separate yourself from 90% of traders who are constantly getting whipsawed by market noise. But here's the best part. This is just step 1 of our 5-step method. Want to know what step 2 is? It's all about finding the exact levels where banks place their orders. Listen up. Everything you know about support and resistance is about to get destroyed. Do you see these traditional support and resistance lines? Absolute garbage. Those traditional support and resistance levels that every retail trader draws. They're nothing more than a trap designed to keep you losing money. Let me show you something that will blow your mind. You see this price action? Most traders see this as just a line, but I see a battlefield. Every single price level is a war zone where millions of dollars are won and lost in seconds. When price approaches a support level, most traders are thinking, this is where it'll bounce. But here's the truth. The market doesn't care about your expectations. This is how amateur traders see levels. Simple horizontal lines, basic bounces, random guessing. But this is how bank traders see the same chart. Retail stop losses, market structure traps, order flow magnets. And I'm about to show you exactly how to spot these levels. But before I reveal my exact method, you need to understand something crucial. When you know how to spot real support and resistance zones, this happens. 93% accuracy in level identification, average 1-to-3 risk-reward ratio, consistent $1,000 weekly profits. But here's what's really going to blow your mind. By the end of this video, you'll understand support and resistance in a way 99% of traders never will. It makes traditional technical analysis look like a joke. And if you think this changes the game, wait until I reveal step number 4. I'm going to reveal something so powerful. Most traders don't even know it exists. It's called the Stealthy Inside bar pattern. And it's the exact same pattern that helped me spot this trade. But I'll show you that game-changing pattern in just a moment. But before I reveal this hidden weapon, you need to understand why everything you've learned about technical analysis is dead wrong. Support and resistance trading is something every trader thinks they know, but most get completely wrong. Support and resistance zones, and I mean real zones, not those basic horizontal lines you're probably drawing right now. All right, let's break this down. When I first started trading, I was just like you, drawing these super precise lines thinking, boom, I've got this trading thing figured out. Laughs boy, was I wrong. Here's the first mind-blowing secret. Support and resistance aren't single price levels, they're zones. And I'm about to show you the exact trading method the pros use to find support and resistance zone. This isn't just another technical analysis lesson. This is about understanding how to map out your charts. By understanding support and resistance this way, you transition from a reactive trader to a strategic trader. You're no longer just looking at lines. You're reading the market's true language. Remember, the market doesn't care about your expectations. It respects liquidity, market structure, and collective trader behavior. So, this is your first professional level insight. Real support and resistance are not singular price levels, but they are zones. The price rarely stops at the exact same price multiple times. That would be too obvious, and every Joe trader will be a trading millionaire by now. But what you often see on the chart is that true support and resistance are contained within a certain price range, aka zones. These price ranges represents the real support and resistance. First up, the top-down approach. We're starting on the daily chart. Why? Because higher time frame support and resistance zones are like trading gold. They're more accurate and price respects them like some kind of market voodoo. Don't trust me? Here's what Jesse Livermore, one of the most successful traders, have to say about this. The daily bar chart is the first place I look each day to get a sense of where the market is heading. The daily time frame gives you a clear view of the trend. All right, now with that cleared out of the way, the most critical aspect to learn before you make your chart show those money-making SR zones is this. Look at this oil chart. What do you see? Nothing special, right? But watch what happens when I show you another trading trick I often use. Start with the left-hand side of the chart and look for V-shaped type swing lows to mark your first support zone. Did I just mention V-shaped swing low? What are those? Imagine a roller coaster. It plunges rapidly downhill, reaching a low point. But then, instead of continuing the descent or leveling off, it shoots straight back up, forming a sharp V shape. That's our starting point. So a V-shaped swing low is a technical analysis pattern that occurs when a security's price experiences a sharp decline, followed by a rapid and significant rebound, forming a V shape on the chart. This pattern is often associated with strong buying pressure that quickly reverses a downward trend. Did you already see one on the price chart? No? Let me help you out. Now, grab that rectangle tool. We're not drawing lines, we're creating zones. Start at the bottom of that V-shaped swing low and slowly drag to the right. As you move to the right, try to adjust the rectangle to encompass the nearby high and low swings in the price. Now, watch how magically the price levels start to align. As you drag and adjust the rectangle and slowly move to the right, your first support and resistance zone will reveal. Here is another pro tip. Ignore the candlestick wicks and try to focus instead on the daily closing price or a cluster of daily closing prices. This is exactly why I like using SR zones sometimes. And who backs me up on this? None other than Paul Tudor Jones, a guy who's made billions with a capital B through stock market trading and forex trading. Here's what he has to say. The most important price of the day is the close. The close often tells you what the next day is going to be like. And he wasn't wrong. Now watch this. When we stretch these SR zones to the left, boom, every single time. Look how price slams into these levels with surgical precision. This isn't magic. This is pure market psychology in action. The beauty of this method, your chart goes from looking like a chaotic mess, cluttered with multiple support and resistance lines, to a clean, strategic battleground of potential trades. The moment you've been waiting for. I'm about to reveal the most powerful pattern I've ever discovered, which is going to completely change how you look at chart formations. But here's the twist. Most traders have no idea it exists. The Stealthy Inside bar pattern. This isn't just another candlestick setup. This is smart money leaving their footprints. Let me paint you a picture. Most traders look at a chart and see, well, candles. But what if I told you the Stealthy Inside bar candlestick pattern occurs right when institutional traders are engineering major trend reversals? In the next 3 minutes, I'll show you exactly how to spot it, confirm it, and most importantly, how to trade it for consistent profits. This isn't theory. We'll look at real examples. Here's the mind-blowing breakdown. An inside day pattern is when a day's price range falls completely inside the previous day's range. Sounds simple, right? Wrong, because this is where the stealthy variation makes all the difference. Imagine a massive mother candle. We're talking about a candle with an above-average range, then nearby candles that screams institutional participation. Then comes this sneaky little inside bar that closes inside the previous candle near the top of its daily range. Not in the middle, not randomly, right at the edge, meaning the inside candle will have a small upside wick. This is where retail traders get baited. And smart money, they capitalize on the confusion. Large players need liquidity. And how do they get it? By creating a price action trap. Let me break down what most traders never understand. Big players need liquidity. And how do they get it? By triggering stop losses of retail traders. That inside bar closing near its extreme. It's not just a coincidence. It's deliberate manipulation. Look at this Bitcoin price chart. These reversals aren't random. They're calculated moves designed to fool the average trader. When you see a stealthy inside bar at a key support or resistance zone, you're witnessing institutional trading in its purest form. But here's where it gets really interesting. I'm about to show you the exact measurements that separate a regular inside bar from a money printing setup. Pro tip: if that inside bar closes within the top or bottom 25% of its daily trading range, and it's around half the mother bar's size, chef's kiss. That's your golden ticket. Let me drop some trading wisdom from the legends. This isn't about discretionary trading. This is about rules, clear chart patterns, specific market structure, precise SR zones. Master these rules and you won't just trade better. You'll trade like the institutions. All right, traders. You wanted to know how to actually execute this stealthy inside bar strategy. I'm about to drop the ultimate trading blueprint. This isn't just another entry trading strategy. This is your blueprint for hunting institutional trade entries in stocks, forex, cryptocurrencies, and beyond. Listen up. Not all inside bars candlestick patterns are created equal. Let me break down exactly what makes a Stealthy Inside bar a game-changing pattern. First, the mother candle needs to be not just above the average trading range of nearby candles, but also at least twice the size of the inside candle. Second, the inside bar closes within the top 25% of its daily trading range. This means the inside bar will have a very small upside wick or shadow. If these two conditions are met, you'll have a large institutional price gap between the high of the inside bar candle and the open of the mother candle. When you spot these exact measurements, you've found what I call a grade A trade setup, the kind that can deliver consistent 3-to-1 returns. What separates the pros from the amateurs? It's spotting this specific setup. Not just any inside bar, but the Stealthy Inside bar. Let's talk execution. And I mean surgical precision execution. A break above the inside bar's high is your buy signal. And a break below the inside bar's low is your sell signal. Those are your trade entry signals. Protective stop. Place the stop loss above the inside bar's high for shorts and below the inside bar's low for longs. We get to have a tight and precise stop loss because this inside bar is completely contained within the mother bar. Exit strategy. 1-to-3 risk to reward ratio. Minimum. No negotiation. No exceptions. We're hunting liquidity levels, previous swing highs or resistance zone for longs, and previous swing lows or support zone for shorts. And we do not settle for anything less than 2R or 3R. Why so aggressive? Because when institutions engineer these setups, the moves are explosive. We're talking about catching massive price moves that make ordinary traders' jaws drop. This is how the big boys play the game. Pro tip, always, and I mean always, confirm your nearby liquidity levels before entering. These are your roadmaps, your treasure maps in the trading jungle. When most traders see a chart, you are going to see a trading opportunity. And if you're serious about leveling up your trading game, subscribe now, because the next video could be the trading setup that changes everything. Your trading success starts with one click. Drop a comment. What's the most mind-blowing trading pattern you've discovered? Catch you on the next trade. Stay bullish, and let's hunt those profits together.